has been highlighting a little bit more in terms of readjustment to lower growth rates afoot there. So otherwise, I mean, it's pretty good looking screen. And Reliance, once again, is amongst the top gainers. Reliance is up about 0.75%. But let's get down to more names and individual reactions. Surbhi.
Okay, so on the large cap screen, taking things higher is Infosys, the winner of the morning. There's Hindalco, which is about 1% up. Bajaj Auto, like we just mentioned, is seeing a decent reaction to its numbers, 1% higher there as well. Asian Paints, L&T, Reliance is chipping in a little bit here and there. Eternal is managing a 0.5% gain for itself as well. And then it starts fizzling out. But otherwise, most stocks are contributing 0.5% to about 0.75%. SBI, ITC, Titan, all these stocks are up and about. On the flip side, Trent is showing a lot of disappointment. The growth numbers have been coming down. The company, remember, I think it was 2 quarters back, it guided a steady state of 25% growth, but it's not able to meet those numbers as well in terms of growth expectations. 4%, so straight away gone from Trent. Power Grid, Apollo Hospitals, Eicher Motors. These are some of the other stocks that are cooling off. So all things put together, the Nifty, for what it's worth, is still managing about a 60-point up move. So steady start. Nigel.
Well, the accent of the morning is transformers and rectifiers. The stock is down 20%, weak performance in Q2 because of executional challenges. The margins are at its lowest levels since Q3. Margins are down because of higher staff costs as well as higher OPEX. And, the street clearly is very, very disappointed with these set of numbers. Smacked 20% down on that one. Remember, these are one of these names that have seen a big run. And now, in fact, is coming for some intense profit taking. The other few stocks I'm looking at, Pennar Industries, well, that stock is down close to around 13%, so big selling on that one. HPL Engineering, well, that came out with a set of numbers. The street likes it. Stock is up 10%. Big up move is what we're seeing on that particular name. Nalco, I told you, the numbers were quite good. That stock is opened up with a gain of around 5.5%. There are some reports that are indicating that Vedanta may not get Jaiprakash Associates assets after all. And Adani Group could get it. It's not confirmed, but if this is the way things, go about, then actually Vedanta shareholders will consider themselves as the lucky loser. They don't want Vedanta to go ahead and take another asset on board. So let's see how that goes. But for the time being, Vedanta up 1.5%. JSW Cement as well is up close to 2%. It's still more than 10% away from its IPO price. And keep in mind that we could possibly have supply that is opened up now because there was, 3% of the equity that was in lock-in. Today, that gets free for trading. Otherwise, plenty of stocks in the broader markets. Newland up 10%. Super move out there in reaction to its numbers. That stock is flying away. And Interarc as well, another management that will be joining in during the course of the day. That's up 6% as well.
Okay, so looking pretty okay for the time being. Newland, HPL Engineering, Nalco, good result reactions. Just watch out for Amber. Amber fell quite a bit on Friday after a disappointing second quarter. And it's down another 3% today. So 7% on Friday, 3% today. Bit of a knock over there. Hexaware is also down about 3%. Trent, by the way, is down 5%. So the market is really not happy with the pace of deceleration in growth. I mean, from an era of 50%, then it came down to about 30%. Then the company said they'll do at least steady state 20-25%. But this quarter has been below even that run rate. And I'm talking about top line growth. Trent, should have been Trent. That's the stock to keep an eye out on. Down 5% for now. Let's get Trent up if we can. I think it'll come up. Yeah, 5.5% lower on Trent now.
Some of these mid caps, small caps are such big winners, right? I mean, Nigel mentioned HBL. I was just looking at yearly charts on this one. 3 years, it's up 10x, HBL. Forget about the lows in 2020. That's, of course, I mean, that just makes it seem absolutely unnatural. But I'm just looking at the close in 2022, $100. And from there, it's come up to about 1,100. Super strong numbers. Look at the volumes pick up on this as well on HBL. Newland is the other one, right? I mean, again, of course, this one as well, 2022, close was 1,600, basically, 1,700. Stocks at almost 20,000 now, right? So some of them, you got to stick with them, which is, of course, harder said than done. Nalco is the third biggest volume-led gainer. It's up 6%, and Nigel was telling us about this earlier. Nykaa is there. Force Motors, of course, such a big winner over the years. Our power is back up about, our power has come off quite a bit from the highs, but it's coming up today. Lumax Tech, I think we mentioned. Interarc Builders, right? I think it's had a pretty decent run last 3 days. From about 2,200, it's moved up to about 2,700. 3 sessions flat. So they are into prefab buildings, prefab structures, I should say, and one of the largest actually in that space. Jain Resources is up 6%. Torrent Pharma is up 4%. So out of the gates, I mean, this is a pretty vibrant looking screen out there. 1,600 stocks are higher and about 900 stocks are lower at this stage. Surbhi.
I forgot to mention the sugar space, Prashant. It's a sweet start to the week. All the sugar stocks, look at Renuka, Balrampur, Bajaj Hindustan, between 3, 4, some even 5% higher. The reason is that the government has allowed export of 1.5 million tons of sugar for the sugar season. The industry was asking for, I think, 2 million tons. They've got 1.5 million tons. It's still 500,000 tons more than last year at least. So exports coming in, and even the duty on export of molasses, that's been done away with. Yeah. So it seems to be creating a bit of
in sugar, I'm not, maybe Manisha will tell us more, but I think sugar prices have crashed globally. Sugar joining us, you know, there is this Goldman Sachs upgrade in terms of their view on India. You know, it's basically calling for a 14% upside at an index level by the end of 2026. Sounds pretty reasonable, right? Given where we are. Although the point is how to play it, Mahesh. I just wanted your thoughts on it if you've looked at the note. You know, it's nothing not that we don't know and we haven't discussed in terms of the reasons and the sort of thesis which they're putting out. But would you agree?
Yeah. Good morning. So I haven't seen that note, but I think clearly, the optimism is coming in from the fact that we are now seeing the period where we've seen last 4 quarters successively, we have seen earnings growth has been weaker. There have been downgrades to earnings. This is the first quarter where we are seeing that the earnings actually downgrades have halted, and we haven't seen any major downgrade. At least the results which have come in for the second quarter show that it's pretty much in line. And as we step into the third quarter onwards into the next fiscal year, the outlook over there on earnings growth looks better. Again, buoyed by a better top line growth. And also a lot of sectors, okay, which especially on the consumption side, the auto sector, because the GST cut would see a boost. So I think, clearly, I think the growth trajectory now, at least looking to go back into the double digits is what one is seeing. And the fact that on the global front also we're seeing the talks about the trade deal getting soon. I think expectation is that in the next 1 month, okay, the trade talks with the US should conclude. So that should improve the sentiments. And more importantly, the foreign investors who were kind of selling India last month of October, if you look at, they were net buyers. And clearly also they are also seeing the relative valuation of India is now no longer as expensive as what it was a year back. And that is also helping. So I would say that from here on, I think the market returns should broadly be in line with the earnings growth. Valuations are reasonable, I would say, slightly above the long-term average. But looking at the steady inflow, which is coming in for the domestic investors and with foreign investors coming back, I think the market should do better, at least compared to the last 1 year. That consolidation which has happened has also really meant that a lot of the weaker hands are out. And I think there is fresh set of investors, especially from global side, could come in. So I'm not surprised by the target. I mean, it could be anywhere between 10 to 14% in that range if you take a 1 year perspective.
Mahesh, hi, good to have you with us this morning. So let's talk about high growth companies and the market's way of looking at them. If you talk about the new age space, I mean, and each is charting its own sort of course, right? Nykaa seems to be on a path to profitability. The numbers have been looking better. But if you look at some of the others, I mean, Eternal, Swiggy is still raising more money, perhaps for further investment into the business. So how are you looking at this entire internet space? And now it's a little confusing, right? Because the company that will list today sells eyewear, but even, Piyush Bansal is very clear that they're a tech company at heart. So what do you make of this whole space and the approach to it?
It's interesting. I think in the last couple of years, we've seen now quite a few companies into this new age technology or the so-called disruptors which are there. And that is now, and quite a few of the IPOs recently and more in the pipeline would mean that you will see a lot more options over there in that space. And I think especially when we look at some of these high growth companies, they are coming in from a phase where very low profitability or no profitability, and that's where the initial period is very difficult to value them on a price to earnings multiple or a even EV to EBITDA multiple. And that's why we would normally look them at slightly longer term view. We would try to forecast their earnings for the next, say, 5 years, because over the next 5 years, the high growth would translate into decent or stable EBITDA margins and also a reasonable profit for us to really value them on a traditional multiples, whether it's EV, EBITDA or P multiple, and then discount that forward. So on that basis is what we will look at it. Obviously, the competitive intensity also is very important because just like what we're seeing in the quick commerce space, the intensity is still fairly large, and with multiple players trying to boost their balance sheets, that can continue to bleed. So I think that's another factor which needs to be borne in mind, that how the competitive intensity is, whether it is settled. If that is the case, then it's fairly easy to really project the earnings going forward. So this is a space where we would take small exposures, build up a basket, and then watch the progress whether they are meeting these high growth targets, and then progressively build exposure in that space. But again, that's a space which is opening up pretty well, and we've seen good performance of some of these stocks in the last 1 year when the market has been flat. So one can't ignore that sector, and most of the new age companies are good quality names. They are dominant in their space. They are market leaders, and that's what gives us comfort over there.
All right. Hi, Mahesh. Good morning. Good to see you, Ben. What about Lenskart? In a few minutes, we'll have the first rate on that one. Plenty of debate. Great business. Valuations questionable, but great response is what they got. We'll have to see what is going to be the listing price. But any view on this one?
Well, I wouldn't. We have also participated in this IPO. Would not like to comment specifically on the company, but again, good companies, good management, strong market positioning, a significant moat. I think these are the factors which we look at in some of these names. And while the initial valuations would look expensive, it's more about also looking at the promoter, right? If we like the vision of the promoter, his ability to not only play that market, but also to pivot at various points in time to really give a new dimension. And these are some of the things which we can't really kind of encapsulate in the multiples. And those are factors actually which we look at when we look at a company, say like Lenskart or any of these new age companies.
So Mahesh, what's the pivot, if any, if I talk about the overall portfolio call that you're taking right now, as we get through the second quarter earnings? Any more changes? For instance, let's look at consumption, because that's the big hope, right? Second half, that the consumption side of the market will revive in a bigger way. So have you made any pivots to that effect? And if yes, and in which pockets of consumption?
So, yeah, so in the GST cut and the whole change in the narrative, towards consumption, which has been an underperforming sector now for the last more than a year. So that makes it much more interesting for us to look at it and names over there, which and it's also a sector, especially which is underowned in a sense. So within that, I think auto is one sector which has already seen some amount of re-rating and rally, but I think it will still continue. I think the growth rate, what we are seeing in the festive season, if that sustains, though even at a slightly lower rate in the next quarters, I think this is a sector which can still see some amount of outperformance over there. Consumer staples is another sector which is still not, last quarter was not that great, but the real impact of the GST cut will come in the ensuing quarters. And there the growth has been fairly weak. We would anticipate that with the overall interest rate cuts, higher disposable income, one should see a better volume growth across in the coming quarters. And this is a sector, again, which is underowned, so that can be a good contrarian play to play out, where we could also see margin improvement because the commodity pressure which was there last year seems to be easing off over there. That's another, I think, pivot which one can look at. But by and large, I would say that we are I mean, the market, we are not seeing any big tailwinds across the sector. So it will be more a bottom-up kind of a market. I think companies are also reacting more to their financials, whether it is positive or negative. So it's going to be more stock-specific rather than taking any large sectoral call at this point in time.
Okay. All right. Fair enough. Some more of a bottom-up approach. Got that. Mahesh, good conversation. Thank you very much for joining in. You have a good day and we look forward to connecting again soon. Well, as we move back to corporate conversations, just a quick glance at the screen, and it's still pretty steady open, about 66, 67 points higher. It's more about individual stocks today. For instance, transformers and rectifiers that Nigel pointed out slammed on bad results, or, well, let's just say, less than expectations result. 20% lower on that stock. Medanta is down. Global Health is down about 3% as well. Nalco is soaring, about 8% up on Nalco. Torrent Pharma, 4%. So it's all about individual result reactions playing out. Speaking of result reactions, the market gave a thumbs up to Bajaj Auto second quarter performance as well. We've seen a pretty healthy set come through for Q2. Resilience coming in terms of the margin growth, largely aided by the move in the rupees as well, and the export volumes looking healthy, looking pretty healthy, good recovery over there. Let's put all of this in perspective and the way forward for the company. Mr. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Mr. Sharma, thank you so much for joining in. Always a pleasure to have you with us. So it's the export markets are really fired up for you. The margin picture is looking very, very robust overall. But I want to start by getting a color on the domestic piece, because the first 2 quarters of this year have been very subdued for the domestic business. But now with the GST cuts and the festive season looking good, like you told us last time we spoke, what is your expectation and, what is your projection for H2 for the domestic two-wheeler business?
Good morning. Yes, the industry was sort of languishing in the April-August period. In motorcycles, it was a tad negative, -1%. And I must say the GST rate cut timed with the festive has catalyzed the industry back into growth. So we are looking at, give or take a few percentage points, but in the band of 6 to 8% growth. But in the coming quarters. However, the other story which is sort of hidden under those overall numbers is the quality of growth. What we have seen that in this 45-day festive period is that in each sub-segment, the higher-end variants and the better products, the better models, have far outstripped the performance of the base models. So whether it's a 100cc, whether it's a 125cc, whether it's above that, we find that our N series, NS series, which are top of the line products, our KTM and Triumph models, they have grown very fast. So it's not just the quantum of growth getting corrected, but I think it's the quality of growth, which is now again reinforcing the up-trading trends which were there, but they've strengthened them further. So that's very good for us because, as you know, we focus on the top half in the 125cc plus, and we are expecting, therefore, to harness this trend.
So that's good to hear. And when you say that in the second half, industry is going to grow at 6 to 8%, what does that imply for Bajaj Auto? I mean, how much better than industry, or would you be in line with the industry?
Well, our focus is the 125cc plus segment, and we hope to outpace the industry. We saw, a reversal of trends somewhat in the September-October period, where we have begun to claw back some market share. So going forward, basically in Q4, because the remaining parts of Q3 are going to be a little, will languish after the huge festive. But yes, come Q4, and we would be, we think that we should be expanding market share in our core strategic area of 125cc.
Can you give a sense of how much that expansion could be in your, your area of focus, which is 125cc plus? I mean, where is the market share right now? What percentage point gains do you think will happen looking at customer preferences?
Yeah, so in October, our assessment is that we have come in at about, I would say, from a registration point of view, we have come in at about 21%. We would be looking forward to adding to that. Now, that's a mix of, competitive reaction and how exactly the segment grows, etc. So the lineup for us and the momentum from September, October is suggesting that we should add to market share, but precisely how much, I'm also very keen to understand that, but I think that will reveal itself more by March or so.
All right. Hi, Mr. Sharma. The other, the strong point has been exports. And that's been seen a very, very healthy recovery. And what's heartening to see is now you're not dependent just on one geography. You've got it spread out a little bit. So a couple of questions out here. I think you clocked 2 lakh units. You expect to hold on to these sort of numbers on a monthly base? Point number one. And point number two is in Nigeria, I think the festive season starts. So what kind of a run rate should we look at from Nigeria?
Well, yeah, we've reached the 2 lakh mark after, I think, about 40 months. So that was a very welcome outcome. We are hoping to maintain the growth tempo, which is between 15 to 20%. There is a little bit of seasonality, which is there where, after the festive, which generally in LATAM and all starts from Thanksgiving and extends up to New Year. So that is almost over from a shipment point of view. But I think we will continue our 2 lakh plus performance hopefully in November. And then we will see a slight dip. But I think the growth tempo will continue. Nigeria is in kind of an equilibrium where we are doing about, between 20 and 30,000 units. This is also season time for Nigeria, and we are hoping to really capture a disproportionate share of the growth. But Nigeria has not yet come back to, the 50, 60,000. In the past, when we have done 2 lakh plus, Nigeria would account for 50, 60,000. And currently, it is accounting for about 25,000. So you can imagine the kind of swing which has taken place in LATAM and parts of Southeast Asia, etc. So we will see how Nigeria goes. But it seems to be in an equilibrium in this 25 to 30,000 range. And but if their macroeconomics, if their currency is stable, that country is capable of much more. But we are going to take it month after month.
All right. A shorter conversation than usual, Mr. Sharma. Thank you very much for joining us. Really appreciate your time and best of luck as you continue to execute. Piyush Bansal of Lenskart is speaking at the NSE as he gets ready to ring the bell, bring Lenskart into the listed space. Listen in.
Lenskart Foundation exists to make vision a right and not a privilege. It's deeply personal to me. When I left Microsoft, it was by a speech from Bill Gates, which said, "From those to whom much is given, much is expected." The foundation is led by my wife, Nidhi, and it keeps purpose alive every day at home. Years ago, I met Ronnie Screwvala, who became an investor. And then I saw on the internet a Swadesh Foundation video of an eyewear van. I immediately picked up the phone and called Ronnie. "This one is ours to do, not yours." That moment stayed with me because I knew the responsibility belonged to here, with us, with me. Over time, it's grown quietly, one village, one school at a time. Not to make headlines, but to make vision reach where it's forgotten. When one child sees clearly for the first time, that's our true profit. None of this would exist without the people who built it. If there's one thing that I've learned in this journey, is that a company is nothing without its people. The engineers who write the code, the designers who shape every curve of the frame, the optometrists who test eyes, the store teams that open the shutter every day before sunrise, and they greet the customers, our home eye checkup teams which visit home. You are the reason Lenskart exists. You are the builders of this dream. A big round of applause for all of them. To my co-founders, Amit, Sumit, and Neha, and to those who have been part of this journey, Ramnik, Ashwini, Shuji, Take, Marco, Borga, Surain, the GeoIQ team, and many more who care about this dream as much as I do, and usually even more. I'm forever grateful. At Lenskart, we believe profit is oxygen. It keeps us alive. But purpose is breath. It keeps us human. Lenskart has always been a purpose-driven organization. For over a decade, we have stayed focused on one single mission: to make high-quality eyewear accessible to all.
All right, well, that's Piyush Bansal, and we'll hear more from him in a bit from now. I think about 20 minutes more, and the bell will go, and Lenskart will be part of the listed universe. We take a break. Akzo Nobel reported numbers, and we'll talk about them with, of course, focus on the outlook. Pains in focus on the other side.
Welcome back. Well, we have got the initial rates with regard to Lenskart. It's settled at around 395 rupees. That compares with the issue price of around 402 rupees. I recall in the run-up to this IPO, there was some kind of, premium that was there, which got totally nullified on Friday. And now I think it's opening up, back in line with what the grey market discount was suggesting. So I think around 3-4 rupees is what it was suggesting. It's opened a little bit lower. So we'll just get back to that in just a bit. And Manglam will join in as well to give us a quick check on the valuations. Let's focus on a couple of good numbers. Nalco, the top line growth was close to around 7.5%, which is good. But the real beat came on the operational performance because the operating EBITDA, that popped up by close to around 25%, which meant the margins came in at around 45% or thereabouts. And both the segments, if you're looking at the chemicals, which is actually the alumina business, out there, they clocked close to 620 crores. Much better sequentially, much better on a year-on-year basis as well. And the aluminium business, well, that came in at close to around 1,200 crore rupees, a direct beneficiary of the LME aluminium price move, and that was on perfect display. So on the top line, there was a good growth, and on the cost front as well. High amount of captive coal, it appears, is what they consume. So cost of power was down, and employee cost as well was a little bit lower, which led the profit number to pop up by more than 35%. On the volumes front, the alumina volumes was up by close to around 40%. A sweetener came in because they've gone ahead and given a dividend of close to around 4 rupees per share. And they've also promised that currently the alumina capacity is at around 2.1 million tons. There'll be 1 million tons that will be added in the middle of 2026. So for everything together, strong trends in the aluminium market. NALCO is flying away, up 7.5%.
Okay, and I think we do have the management of Akzo Nobel now joining in. So let's discuss the quarterly trends. The company reported a mute set of numbers. Numbers were slightly lower on account of course, the carve-out and sale of the powder coatings business. Rajiv Rajagopal, Chairman and Managing Director at Akzo Nobel, is with us. Mr. Rajagopal, thank you so much for joining in. So let's start with the broad trends first. In terms of volumes, Q2 and beyond, when the sentiment turned around thanks to the GST cuts, I mean, what are you seeing and what are you projecting for the rest of the year?
Good morning, Surabhi, and good to be back, and thank you for having me on your show. Look, I think as far as volumes are concerned, the last quarter after the prior quarter was a strong quarter. We grew 3% in volumes. Remember that our growth, both in decorative paints and in our coatings business, has largely come through premium. So I think one of the great things that we've seen, which is, I guess, slightly different from some of the other industry players, is the fact that we grew in premium. We grew mid-single digit in premium, and that clearly shows us that we are poised well. Where we've had an issue is really on the larger part on the mass economy, because there was heavy discounting and pricing-led actions in the market, and we chose to play very selectively there. We've come back pretty strongly. We also have taken some price corrections. Yeah, so I think from a volume perspective, I think we are now going to move to a high single digit. In the coming quarter, in the current quarter, we should be at between mid to a high single digit, and then go to double digit in the next quarter. That's the volume.
So that will take the total second half volume growth to
about a mid-single digit now, because the reason for that, Surabhi, is that if you look at the volume growth is largely coming from mass economy, construction, chemicals, and putty. And those are not the segments which have been our core competencies. Construction chemicals, we are just about to launch in the next month, in December. So hence, you would see a slight gap. But once we launch, we have tested our products. We do a lot of checks at our lab before we bring it to market, because we want to make sure that our products are of Dulux standards, and hence we've taken a bit of time rather than rushing in. But those are slightly lower margin products, and hence for us we need to also make sure that we are closer to market, because otherwise it's margin dilutive, right? So our entire infrastructure setup, etc., is taking time. But once we get in, you would start seeing the volume growth coming back to double digit.
Okay, all right. So what should margin look like then, for the second half of the year? Because there will be some benefits, sale of the powder business. You also have lower royalty rates as well. Give us a broad range, sir.
Yeah, so Nigel, good morning. So, just a quick one. First and foremost, you have to look at the revenue and all the figures net of the powder, the carved out business, which is powder, IRC business, etc. And hence, if you look at from a revenue perspective, we were down first by about 1.5%. Let me explain that. So I told you volume has grown for us. Our mix has not been hugely adverse. Our entire drop is on the price. And why? Largely led by decorative. Because we are transitioning, as you know, to JSW paints eventually. So hence, I think the brief, and we are following the brief which we've got, which is to get aggressive and make sure we participate in every segment and drive top line. So the focus is going to be hugely on market share. But to your question, I think I would like to say our EBIT margins we will keep, as I said in the investor call on Friday, guidance between 14 to 16%, while we are aggressively focusing on our top line.
Since you brought up, the new Akzo, so to speak, with the merger moving ahead, just tell us what else is changing. So one clear, change in strategy or sort of renewed push that we're seeing is that you want to be in all segments. The brief is, like you're saying, is to be aggressive. Give us some more color. What will that aggression really look like? And how is the overall competitive intensity? Very interesting times, because we were speaking with Berger Paints and we were talking to them about what the changes at Birla Opus really mean. I mean, the exit of the top executive there suddenly got the market very excited, thinking that the aggressive intensity from the Birlas is going to die down. But from what you say, I don't think it's dying down from the JSW group.
Well, look, I think, Surabhi, let me take the second part of your question first. Look, firstly, I don't want to comment about people. I think it's not right. We respect all players in the market, and I think that's the way we've been. Coming specifically to, do I see the competitive intensity slowing down? No, I don't. I think on the contrary, I see this going to continue for about a year. I mean, people, and this is, I'm not just talking of, the Birla Opus, but if you look at all the players who've come in, they put sizable amount of capex and money into the businesses. So we should expect competitive intensity to continue, at least for a year, if not a year and a half, is my view at this point of time. And so we are poised because, to me, I think it's important to have a ground reality of what it is. Yeah, I think, yes, there has been a recent trend of, of Birla Opus maybe in a month or quarter, but I don't think that's you're comparing to a standard which is, if you look at what they've achieved, is not small. And hence, we don't want to take, we take notice of every competitor and we don't want to sort of, let go right now. On JSW Paints, I think it's very important for Mr. Parth Jindal. I think it's more appropriate for him to answer once the entire deal closure happens. I think, and perhaps after that, maybe it's appropriate for me to comment, Surabhi.
Okay, all right. Let's talk about your business then. Post the sale of the powder coatings business and the other smaller business, you'll have some cash, right? Some liquidity has come in. How do you use this money?
So we are going to use it to continuously drive growth. I think the focus has been, Nigel, to be consistent with what I've said in my previous interviews. We are investing behind our brand. If you saw, we just did a campaign on Lage Shandar, Chale Shandar. Remember that in 2021, we were the first player to actually bring this entire warranty into the market. But what you've seen is both the largest player and the recent challenger, both trying to stake claim by putting huge amount of monies on the campaign. Hence, I think our agency did a fantastic job with our marketing team. We said that, look, it's quality that delivers warranty. And we are very clear that Dulux stands for the best-in-class quality in paints, at this point of time, anywhere in India, if not worldwide, right? So hence, our focus is to bring that simple message to our consumers, and we are seeing some good uptake. The fact is we grew mid-single digit in premium. It's slightly different from the narrative that you've heard, maybe other than one player. So I think that tells you that's a testimony of the fact that we continue to focus on premium. You can continue to expect a lot of innovations coming in the coming months and in the quarters ahead, and both. And we are going to straddle across price points. We're going to straddle across the portfolios and start intensifying our efforts to start getting market share.
Mr. Rajgopal, thank you very much for joining us, sir. Good speaking with you, and good luck to you and your team. It's always great speaking with you here on CNBC-TV18.
Thank you.
Well, let's just go across to the management of Niva Bupa now. So, general insurance industry growth slowed in October, with certain players performing strongly. We have Mr. Vishwanath M, ED and CFO of Niva Bupa Health Insurance. Mr. Vishwanath, great to have you with us here. Good morning. I don't think we've spoken after your second quarter numbers, which is July to September. And of course, after that, you've also reported, October numbers. That is the monthly numbers as well, which have now come through. So, I mean, I guess we can go backwards, right? Look at the latest, which is what you've seen in October. So 50% retail growth is what we pick up you've managed to do in October. That's a monthly number. And the ticket size in October is some 15% higher. These are very strong numbers. Could you give us a sense of what happened in October?
Yeah, good morning and thanks for inviting me to the show. So let me just decode October numbers for you. So one thing which has happened is this GST, and it is a very, very positive impact. And as you know, we all decided, specifically I can talk about our company, to pass on the entire GST benefit to us. And the idea of this is that volume should increase, and that's what we are seeing. So in so the reported numbers are slightly different. So 67% overall, 50 plus 56% retail. But if I just give you a like-to-like number, which is without 1/n, and that's what we have been, suggesting to look at. So in the Q1, in fact, in the H1, if we see April to September, our retail growth like-to-like was 28%. The same number for October is 40%. So that's the kind of uptick we have seen. So 2-3 reasons. One, of course, is GST. There was already very good awareness of health insurance post-COVID, but this has also gave boost to affordability, the GST exemption. And second, we launched a product, Reassure 3.0, that has got very good reception. So this is a combination of 2-3 things. Of course, there's higher awareness, there's interest for this category, and that's now converting into actual sale.
Yeah.
And we have product.
Can I come in, sir?
So these are yeah.
Yeah. Sorry, you're saying that retail premium growth in H1 was 28%, right?
Yes.
And in October, that like-to-like number is up 40%.
40%. That's right. Yeah.
And the entire GST cut has been passed on to distributors.
That's right. Yeah. To customers. And the GST, this exemption is passed on to customers. What that means is we have not increased rates.
Yes, that's what I meant. Sorry. Yes. You've not. You've passed it on basically to end consumers.
Yeah, that's right. Yeah.
Okay. And this 1/n, which is basically accounting for premium over the term of the policy, these numbers are based on that method?
The one which I quoted you, that 40% retail growth are without that 1/n. With 1/n, it is higher because, this was implemented 1st October 2024. Now the premium which was deferred has started coming in, and which is true for the entire industry. The numbers are there in front of you.
And why is the average ticket size gone up as well?
So
any particular reason?
Yeah, one is related to Reassure 3.2, the new product. Second is also because people are upgrading their sum insured. Those who are renewing, not only the persistency is high, but they are upgrading their sum insured. So upsell, cross-sell is also one factor. And of course, with the high affordability, people are going for higher ticket size products.
Got that. There is also some talk that health and general insurance companies were in talks with hospitals to find some arrangement on rate increases by hospitals. Have you reached any such agreements? You can tell us.
Yeah, so that's one project which has been taken at General Insurance Council level, which is industry body. And they are looking at few things. One, of course, is standardization of tariff, common empanelment, standardization of protocol, admission criteria, etc. So that project is going on. It's slightly longer term.
Okay.
But what I understand, it's getting traction.
Last question, sir. Fettletone, which is an investor, they have about 8, just under 8%, and we understand they're looking to sell about 5% of that. Anything you can tell us?
About Fettletone, it is a true north vehicle. Of course, being private equity, it has finite life. At some point in time, they will exit. I'm not sure about the timing. But one thing I can assure you is it's going to be a very coordinated sale. They are very, very responsible investors. So we don't have to worry about supply overhang if that's what you're alluding to.
All right. Thanks very much, sir. Thank you for joining us. Appreciate it. And we'll talk more. I think Lenskart is what we want to focus on. And that's the much-awaited listing on your screen. Piyush Bansal and other company officials, along with, of course, family, friends. And I guess I can see Mr. The exchange officials as well. It's starting about 8.5% lower and at about 370 odd rupees or so. So 30 rupees lower on Lenskart. At the word go, that's the first tick which is coming through. One of the most discussed, debated IPOs with regards to its valuations in recent times. So 402 was what the company sold stock at, and it's listed at 395. It's at about 357 at this point in time. So 10 or 11% lower at this stage. Guys.
No, but I'd just like to say that obviously, and this is going to be a big headline, that day one of Lenskart, and we don't know, it's still a long day ahead. Right now, the stock's down 10%. But I just want to say that companies like these have a much. It's just the start, and that's what Piyush Bansal said, that this is day zero for him, even though it is listing day. And I just want to take our viewers back to what happened when Eternal listed. There was a fair amount of excitement, and then the stock went through a very, very, deep, rough patch. There were further investments in the business, and then Eternal managed to come roaring back and regained a fair amount of confidence. So, I mean, these are different companies. They're big disruptors, as Mahesh said. And, I think the debate on what Lenskart will really bring to its shareholders, current shareholders and future shareholders, that debate is not going away anytime soon. And Nigel, I'll be very interesting to see, at what point do buyers start come in? Because with Lenskart, the entire debate was not about the business. I don't think there was anyone doubting the business potential. They're in foreign markets. 40% of their revenue is coming from overseas. And they're looking at all kinds of tech. So there was no debate about the business or those who are running the business. The only debate was on the price. The price is adjusting, and we'll see what happens.
Well, that's right. Hard to buy a stock when it comes at around 11 times price to sales, right? So that was the issue of valuations, but no two doubts about it. They built a very, very good business. Business was good. Problem was in terms of the valuations. The stock has pulled back close to around 10% from the peak. And I'll go with you, Surbi, as you're saying that we have seen various issues where the listing is blockbuster and then the stock loses its way.
Absolutely.
Will this be one of those that, you have a soft listing and then you see some kind of stability? Let's see how it goes. But for the time being, stock down 10%. Or now it's down only around 5%.
I think given all the concerns around valuations, etc., tepid listing, what was expected.
Yeah,
So I think it's par for the course in that sense. So it's a 10% lower, and now it's down 5, right? So and it'll move around today till it finally figures out some kind of even keel, some kind of equilibrium. It's just very, very early days. Absolutely par for the course, I would say. And that's actually, this is what it was expected as well. So, and that's what's actually happened as well. I hope we get a chance to speak with Piyush now after the company is listed and made its debut. And we'll try and do that. I think everyone is there at the NSE. Our colleagues are also there. We'll try and get a quick sense and quick response. We, of course, cut to him earlier making that speech into the listing 20 minutes before, but more as we come through here. So that's Lenskart, one more addition into the listed space. Large company now, market capitalization, I think, big one.
Stock's recovering also. We must, keep that in mind. Started almost 10% lower. It's recovering also. So it's telling us that, debate between buyer and seller, it's a beautiful one, and that's exactly what the market is made up of. So right now, Lenskart already on recovery path. Nigel, you wanted to make a point?
No, I'm just, just looking at the volumes. Massive traded volumes in the first minute, 1,400 crores on the NSE itself. Massive, and by the end of today, I'll be interested to see whether or not there are any large funds that come in, to buy into this issue, because you got a big dip of around 10%.
Look at the recovery.
Let's keep an eye out on that. But for the time being, 8% off the lowest. Lenskart going to be a stock that we'll be talking about all through the trading session, and maybe for the next few days as well. More actively, we'll track that one. Slip into a break, come back. Manisha Gupta is waiting for us. She'll tell us about what's going on in the commodity space. Stay tuned.
Welcome back. Well, it's a steady morning for the equity market. Let's find out what's happening in the world of commodities. Manisha, what's capturing your eyes?
Well, plenty of things really, Surbhi, because when you look at the gold prices, we are back above $4,000 an ounce. Sugar exports have got a yes. A lot of pieces to look at, but I really want to come to what SEBI came out with over the weekend, where they are warning on digital gold being offered on online platforms. And this is coming in on various very, very credible platforms. Remember, this place is not regulated, and that's exactly what SEBI goes on to say and warn as well. They say that the digital gold is unregulated, one, it is not notified, not securities, and not regulated as commodity derivatives as well. So it is a bit of a grey area when you look at digital gold in that sense, but we have seen a lot of euphoria around this. It also says, the SEBI notification that also says that it may expose investors to counterparty and operational risk. There's no grievance hearing into this one as well. We have seen gold prices make 53% of gains in this year, and not everybody can buy a lot of gold, and is the reason a lot of people were buying fractional tokenized digital gold in that sense. Now, SEBI says what you can though buy is exchange traded commodity derivatives, gold ETFs, gold mutual funds are also there that you can buy it via. And then, of course, there is electronic gold receipts that is tradable on exchanges. Are the some products that are regulated at this point in time? Anything else that you see in sense of schemes or digital gold, online gold, etc., is not regulated. And SEBI has come out in sense of warning for that one. Another important thing now is to tell you on what really digital gold is all about. Now, this is offered by payment apps. It's offered by some jewelers as well, some fintech companies also. And interestingly, it does allow the users to buy gold for as less as 100 rupees, 10 rupees, even 1 rupee in some of those platforms. So this is something that you see as a 24/7 market. You can buy gold anytime, anywhere. And it usually is the age group anywhere between 25 to 45 that really seems to be buying a lot of digital gold at this point in time. Interestingly, when you look at the key features, what you buy gold in sense of is 24 carats. The other thing is about storage. Whatever gold that you buy is bought and stored in insured third-party secure vaults on the customer's behalf. The other positive thing that a lot of consumers saw within digital gold was about accessibility. As I said, you can buy as low as 10 rupees when you want to buy that fractionized gold. There's good liquidity as well, because you can buy, sell, trade at any point in time on market prices there, and redemptions can happen in cash, or you can buy physical gold into this one as well. Now, who offers all of this digital gold? There are very, very strong names coming in here. You have all these fintech companies, online platforms like Google Pay, Phone Pay, Paytm, Amazon Pay, all of them give digital gold. It also is about investment platforms like Grow and Zerodha. You can also buy digital gold onto this one there. Then you have jewelers like Tanishq and Kalyan and Carrot Lane. And you have service providers like Augmont, MMT, CPAM, Safe Gold, Digital Gold also providing that. My final chart should show you on what really is the digital gold market within India. It is an 8-year-old market. Companies themselves have been asking for the product to be regulated because so many people right now have bought gold. Well, actually, when you import 800 tons, digital gold market right now is perhaps 1 to 2% of that. But even with that, the digital gold and wealth tech platform market is valued at 15,000 crores as of now. Industry reports suggest that it's going at a CAGR of 25%. And when you look at the overall number there, well, the UPI transactions when it comes to buy digital gold doubled between the first half in this year itself. And that perhaps is the reason that SEBI had to come out and warn about that. So very, very strong volumes being done. And 2025 clearly has been a record year in sense of digital gold and digital silver buying. Thus the warning.
That's a great point, Manisha, and you explained it so well indeed. Because in the last couple of years, a lot of people just gravitated towards this. It seems simple and easy, and you could buy gold in such small quantities. But the regulators made its stance very clear that we're not regulating it. So if you're buying at your own risks. Thank you for explaining that to us. Well, on that note, we'll take a very quick break. On the other side, we have our special segment, It's the Economy, coming up. Lata will be in conversation with Sonal Desai of Franklin Templeton Fixed Income on US yields, dollar and the rupee.
Welcome to It's the Economy. While US equities have ruled the roost despite occasional bouts of doubts over AI stocks, US 10-year yields have mostly remained above 4% for a better part of the year despite so many rate cuts, partly due to strong data or doubts over the fiscal deficit, especially if the US Supreme Court holds the tariffs illegal. The higher yields have recently strengthened the dollar index as well, the DXY, to nearly 99. The market is still divided over another rate hike from the Fed, and despite strong ISM data, there are doubts over growth everywhere, not just in the US, because of political uncertainty. To get a fix on everything concerning US bonds, Euro bonds, yields, dollar, yen, rupee, I have with me Sonal Desai, Executive Vice President and Chief Investment Officer with Franklin Templeton Fixed Income. Sonal, pleasure having you back in India with us.
Lata, it's so nice to be here with you.
Thank you. Okay, let me start at the beginning. Okay. How many rate cuts so far? And still, the US yields have remained, the 10-year yields have remained above 4%. What's the forecast for the coming year? Do you see it dipping because of Fed cuts?
No. Actually, so the short answer is I don't think. I think you're exactly right. You nailed it. The Fed has cut so much, all the way from 550 now to 375. And indeed, US 10-year yields have remained stubbornly above 4. They keep trying to break 4, but they don't get there. And I think that this is a combination of a couple of things. Certainly the fiscal issue, and in the last few days for sure, as it becomes more and more likely that the Supreme Court will express some concerns at a bare minimum on the tariffs, and we start seeing that 10-year yields start inching back up. But you know, to me, the curious thing is not that 10-year yields haven't dropped below 4, but more that they're not at 450 or a little bit higher still. And let me explain why. I think that the Fed currently, with its rates at 375 to 4, far from being moderately restrictive, as Jay Powell says, I think actually they are looser than neutral. And if we don't believe that the US economy is going to tumble into a recession, is going to face a serious slowdown, there is no real need to have rates cut more from here.
Okay. But, you know, there is an argument that globally growth will slow, partly because of political uncertainty. You don't see that as an argument that, you know, immigration questions, tariff questions, doubts over growth is not a reason for yields to fall?
I think those doubts are very interesting because I think they're sentiment-driven rather than data-driven. So let me first talk about... And data is strong. And the reality is, let's take a step back and talk just about the US for a moment. The US is effectively, from my perspective, a large closed economy. Before you get worried about this, I'm not saying the US doesn't import anything, export anything, but the US is a $30 trillion economy. 70% of 30 trillion is consumption, 21 trillion. 70% of consumption is services, not tariffed. You keep bringing it smaller and smaller and smaller. Finally, you get to imported goods. 50% of those imported goods are actually excluded from tariffs. So in the end, tariffs, you know, even for the US, tariffs in and of themselves were never a reason to create a growth slowdown. And separately, imports deduct from growth. They don't add to growth. Globally, it is a slightly different issue. You know, different countries to varying degrees depend on exporting to the US. But in the US, I am not sure that we have seen a significant growth slowdown. And I'm happy to talk about things like the labor market.
So in your base case is that there are no more Fed cuts and definitely not in December?
So I would say at this point, we have a government shutdown. So, you know, it's always feasible that by the end of this week or next week, you know, BLS reopens, the government reopens, and we find some shockingly weak data. That is not my baseline. Because right now, what I'm guiding myself by are things like the higher frequency private sector labor market reports, the equity market earnings reports, all of which are still pointing to a relatively strong consumer. And therefore, I'm not anticipating drama from the data when it comes. But suppose it comes. Supposing you get that drama, yes, they will cut. But if you don't get that drama, I think it would be quite reckless for the Fed to cut in December. Okay. Do I think the Fed would cut one more time still in this rate cutting cycle? It's possible. It takes you now to 350. And now, to me, you are 50 basis points loose. And that starts becoming interesting because a lot of the tax cuts, the fiscal expansion embodied in the big, beautiful bill, they come in Q1 of next year. Suddenly, people get tax rebates. Firms have an incentive to invest even more because they get immediate depreciation. So I think some very useful things come to which act as tailwinds for the economy.
Okay. Fair enough. So then the reasons for cutting kind of disappear.
Yes.
Let me come to the dollar index, therefore.
Yeah.
Is it headed higher then, or at least it's not weakening?
I think what we saw in the first half of the year, that dramatic collapse of the dollar.
From 106 to 100.
100. And if I think about the more narrow version, which is if I just look at the G3, the yen and the euro and the dollar, and everyone said, oh, the dollar has depreciated so much, it's depreciated so much. I think what is underestimated is how strong the dollar was coming into this year. In real terms, the dollar was at its strongest level since the Plaza Accords of the 1980s. We've gone through several years, US exceptionalism, all this type of stuff, attracting massive capital inflows. And the dollar was so strong. Against the euro, it was at close to parity at one point.
Yes.
Today, we are at 115, 116. That's close to fair value. So I think we got a dramatic depreciation at the start of the year. 3 reasons. China DeepSeek, Germany suddenly issuing a lot of fiscal stimulus, and then the famous Liberation Day tariffs, which really got everyone worried.
Okay, fair enough. So your any range for the DXY?
So I'd say
first
right
half
now,
of next year?
No, I'd say that there will not, I don't see right now extremely strong directionality. Supposing the tariffs are ruled as being illegal, that means, you get larger fiscal deficits. The interesting thing about larger fiscal deficits, you might see a yield sell-off, and that actually attracts some inflows. It starts becoming a little bit more two-sided as to whether you get a little bit more dollar strength or you are somewhat range-bound.
Okay, ranged. Let me come on in that context to the rupee, though I want to speak about the yen as well to you. We have seen the rupee have a bad or a weak, I call it bad, have a weak 2025. Is it about at the bottom?
I hesitate to call at the bottom. For the reality is we don't have the final tariff picture yet for India, and exports are going to have a certain impact. So again, there are some pros, there are some cons. Over here, what you see is in favor of rupee strength, I would say, are weaker oil prices. This certainly helps India. Against the rupee is the fact that we potentially are going to have more issues with our exports to the US. So I hesitate to call it as
so
such.
Basically, it is capital flows.
It's capital flows.
We don't have a trade deficit issue to that extent.
It's capital.
Our issue is a capital deficit. I mean, at the moment, capital flow deficit.
Yeah.
So let me first discuss your area. Bonds actually saw decent flows. We've had 3 or 4 years of equity outflows, but it was bond inflow. Even 2025 is a net bond inflow. I think I have the number. Over 2 billion is a net inflow. You think Indian bonds will be attractive?
I think actually Indian bonds are attractive. I think they are attractive for a couple of different reasons. One thing to keep in mind is we should not understate the importance of the significant fiscal consolidation that has taken place in India over the last several years. And you have that inclusion in indices. You have a variety of different reasons which are all positive, and quite frankly, India is doing enormously well. You can take point factors like Apple moving 50% of its production here. There are any number of reasons to be optimistic.
And inflation is low.
Yes, and inflation is low. So, against that background, I do think that I think that there are many factors playing to the attractiveness of Indian bonds. So I would note that. Against this, there is the fact that we think that as we look over the longer term, we do think that there may be some steepening still to come in terms of where we are. So Indian bonds are attractive. They could become even more attractive. This is one thing I would say. I would put it that way.
The other thing that has in the past upset the apple cart for global treasuries or global yields is the yen. Do you see a rate hike from the BOJ? How is the yen headed? Is there a lot of yen strength that might upset the markets?
So I would have said the yen is... So first, let's talk about fundamentals. From a fundamental perspective, the yen is one of the most undervalued currencies out there. So, so you see this also in the differential between the euro and the yen, because the euro moved to fair value and potentially maybe even a little bit stronger than fair value. We don't know. But the yen clearly is not there yet. And so the yen has the potential to become stronger, but we also have a new prime minister there who actually is thinking along the lines of policies which on balance would not immediately strengthen the yen. So I would say that, yes, the BOJ probably does need to raise rates. You do have an inflation issue in Japan, but it doesn't sound like there will be any rush to that outcome currently. And counterbalancing that is always the question of fiscal.
Okay. Yeah, there is earlier in this year, the yen moves did disturb all the
markets.
Yes,
they did. Those, and I agree. Earlier this year, they did, because there was a great deal of sudden belief that Japan was going to normalize and the US was going to fall into a deep recession. Yes. Therefore, US rates rallied. And so the differential between yields in Japan and the US narrowed. And that, I think, is where that came from.
Okay, the bigger question, of course, which every one of our viewers want to know from you is, where do you stand on gold? We saw that 4,000 plus, and ultimately it is a safe haven play.
It is a safe haven play.
So, how do you see that playing? Does US dollar attract because of tariff issues getting settled, or will gold continue to be a pull?
I think gold actually has regained a position which probably in the next few years, I don't see it losing. I don't know that we will continue to see that rapid ratchet up of gold, because on the one hand, we keep talking about political uncertainty. But Lata, actually, in many respects, political uncertainty has not gone up. We are actually seeing resolution in some areas of long-standing issues. If we're talking about the Middle East, for example, we're thinking about oil. Various areas, we're actually seeing a little bit less uncertainty. So it's true that there is the political uncertainty element, but I think the more interesting thing is for the next several years, we're going to see inflation. And so the two things I don't believe about gold are, number one, or that this is somehow a description of the dollar's loss of its supremacy, and therefore people are going to gold. I think to some extent it is a natural reaction to the fact that inflation globally is a little bit higher than it used to be. And there is definitely more policy uncertainty emanating from the US, but that potentially will last for another few years, and then that could reverse. But I'm not sure that gold's attractiveness fully reverses. And I definitely don't think when people talk about dollar supremacy, this is the end of the dollars, I think that is wildly overblown, because every time there was a lot of excitement, for example, showing that gold had achieved the second largest exposure reserve status in various central bank holdings. And I think here the more interesting thing to think about is not that gold achieved it, but why the euro didn't. No. And that, I think, pretty much tells you that the dollar does not have a significant competitor in the currency world.
Fair enough. I think that everybody will buy. Everyone who has got anything to do with the global markets. Just a final question. Give us a range for the rupee for the next 6 months.
So, I am going to hesitate to do that, but mainly because I don't do these point estimates. But I do think, let me put it this way, we do think that the RBI probably can cut 25 basis points to 50 basis points already in December. We think in general, the outlook for India is actually really quite strong, and despite all the tariff noise. So there may be some depreciation pressure, but I don't anticipate anything as dramatic as what we saw earlier on this year.
Okay, that's plenty of things you have clarified for us. Thank you very much, Sonal Desai, for coming here and joining us in the studio itself.
Thank you so much, Lata. It's a pleasure.
Well, that's it from Sonal Desai of Franklin Templeton. Thanks much for joining us. After a break, time for Chartbusters.